Ravi Kumar, the co-founder and CEO at Upstox. They've managed to break even. Remember, this is a Ratan Tata backed company. They've broken even in 2023. Ravi, hi, good morning. Great to have you on ET Now and many congratulations.
Thank you very much for having me on the show. It's an honor to be here. Thank you.
Right. So you finally managed to break even, right, this fiscal, and your revenues, as we understand, have already crossed that 1 lakh crore rupee mark as well. Do you think this kind of growth momentum can continue at the same space, or do you think some cool off in the numbers could happen in the short term?
Look, I think we're a long-term player, right? We didn't cross 1 lakh crore. We crossed 1,000 crore revenue this past fiscal. We've grown 40% in a market which was fairly flat. Nifty March 31st of 2023 versus March 31st of 2022. The index was pretty much flat, but we still managed to grow 40% due to the great platform that we built and the great team that we have. And we remain focused. We became profitable this year, which is just a long-term vision is to at Upstox is to just really build up retail equity participation. We think that the India growth story is one of the most fantastic growth stories of mankind, and it's a 25-30-year journey for us.
And corrected there, 1,000 crores. Yes, that was the revenue. But tell me, what is the overall strategy, say, for the next 3 to 5 years? And of course, the question on everyone's mind is, when are you going to IPO?
The strategy here is, if you look at, say, platforms in the US like Charles Schwab and Fidelity or Vanguard, right? The US economic growth story, just to give you some contrast here, it's probably one of the most amazing growth stories in our existence, right? In 1990, if you invested $100 in the S&P 500, today it's worth over $2,000. And we think the Indian economic growth story is probably even more fantastic. So as India's GDP ascends and we become, one of the top 3 countries in the world, it's very imperative that the people of India and the retail masses benefit from this immense growth potential. And so as a platform, we believe that being a tech-first, product-first, mobile-first platform is the future. We've been able to onboard over 11 million customers in our journey so far. And our vision is in the next 4 or 5 years to onboard another 100 million users and to help the masses really optimize their wealth creation journey. I think the simplest things are the best ways to invest in India. Just buying into a low-cost ETF and SIPing your way into it month on month can just generate vastly outsized returns. And that's our plan.
If I look at what your peers are indicating, whether it is Zerodha or Angel, one is listed, other one is not listed. We get updates on a quarterly basis. They are talking about a decline in market share. They are talking about a slowdown in demat accounts. They are talking about markets coming down, retail traders going away. And that's the basic nature of the broking business. How come that's not been a challenge for you?
Look, I think markets are always cyclical, right? And we're always kind of linked to the way the index is doing, the overall broad market index is doing. Nifty remained flat this year, but it still fared much better than global peers. So again, we don't really focus so much on just short term. To us, it's a 30, 40, 50-year vision. The Fidelities and Schwabs of the world have been around for multiple decades. Fidelity's been around for 70, 75 years. They've helped 45 million households in America just participate in the great economic growth story. So we're trying to build a brand that really lasts, for a long time. And because we're profitable now, there is no, cash issue at all. There's just, it's just the vision just to build profitably and to build over time. So short-term vagaries will always be there, like any industry. We are cyclical in that sense. But the midterm, long-term positioning of the Indian growth story is just incredible, as you and I all believe. So that's the way we look at it. So this past year, I think because Nifty was a little bit flat, our space generally felt that pressure a little bit. We've been able to outgrow it a little bit because we focused on quality customers. We also, have an amazing branding presence on platforms like IPL and ICC, which have really helped us scale from a branding perspective. So these are the things that we did differently, I believe. But every story is different, and again, we're all just trying to get the masses to be a part of this wonderful economic growth story.
Trend, what you see in your clientele, is it coming from small towns, large towns, the same folks are trading more? What is the trend for us, which could be a very broking stroke India specific trend according to you?
So almost 85% of our customers now, new customers now, are all from tier 3 towns, tier 2, tier 3 towns, which is where the growth is going to come from, right? Equity participation in India today is still barely scratching 6%. You know, in the US, it's over 50%. Even China enjoys over 20% economic retail equity participation. So we have so much headroom left, you know, and as the Indian market grows, it's very, very important that we all play our part, right? And just helping people manage these savings and just direct them towards, you know, high quality equity markets, high quality equity stocks. And that's what we try to do. So every day, this is what we focus on, essentially, when we come into work.
Hi, you know, maybe we're harping on the same thing when we're talking about the earnings trajectory, but I only ask because some of the peers like Zerodha, for instance, they have acknowledged that there could be a bit of a tough FY24, earnings could take a hit. So you're confident that looking at the long-term growth story, the kind of traction that you're seeing in tier 3 towns, etc., that this will not be impacted? Any projections that you can give us in terms of your revenue as well as profits?
See, we've generally been almost doubling revenue on average every year, you know, and this past year was a little bit more tepid because the market itself didn't grow so much. But that's a guidance for our way forward as well, I would say, you know. And again, because we're profitable now, there's no really, you know, no pressure for us to, you know, do some crazy growth story or something like that. But generally speaking, I'm just generally extremely bullish. I think short-term trends will always remain. You know, it's hard to exactly predict which way the market's going to go 3 months, 6 months from now. But from a multi-year standpoint, you know, the story is, you know, vastly up. That's the way we just look at things. You know, I think we're also profitable now. So I think we expect to end this fiscal with probably 25%, 30% PAT, you know, and just keep growing.
Ravi, tell me, but are you looking at expanding any other new digital product launches, cross-selling services, anything that's in the pipeline?
Definitely. I think the India fintech space overall is just absolutely incredible. The government's done so much to just help platforms like us digitize. And it's very easy, you know, for us to just launch and bolt on new products. So, you know, we could get into we can get into an AMC kind of a thing. We can get into lending. We can get into neo-banking, insurance. All these plays are open for us. But the vision we have at Upstox is, you know, when you walk in through that Upstox door, how do we help you confidently, you know, increase your wealth, up your wealth? That's the reason for that's our reason for existence, you know, and whatever we do in that process to help you manage your wealth better, we will do. You know, if that's banking or if that's lending or if that's insurance, you know, we're game for that. But the main motive for you to enter our brand should be to just up your wealth.
Good to know, and I'm sure a lot of retail investors as well will like that comment. Thank you so much, Ravi, for joining in and sharing with us your growth projections as well as what the outlook is when it comes to, you know, retail participation as a whole.